We're still early.
How early? Explain. I mean, to people who say, how can that possibly be true? Now you're starting to see the articles trickle out. Oh, AI might not be that transformative. Oh, talk about why this stock can still have more room to run.
Yeah, you bet. So people get nervous, and I get it. Don't get me wrong. I mean, the stock, and not just stock, but the numbers have run so far, so quickly that people do worry about sustainability, and I understand that. But at the same time, you can sort of look at where the shares are trading on a valuation basis. They're much cheaper than they were before this started. As much as the stock has gone up, like the demand for the parts and the impact of the financials has gone up even more. It's been really amazing. We are at the point now where we're seeing like massive amounts of capex from the hyperscale players, which I think is good. I think where people get nervous is on the enterprise side. We are still in the experimentation phase, and this is true. Like enterprises tend to move slower, but I do like the amount of breadth that we are seeing here. There are many enterprises that actually are experimenting here. Nvidia talked about this. I think they talked about like large cloud vendors were only about 40 or 45% of their total revenues there. Their customer base is still broadening out. We are seeing more and more deployments as business models are getting built on the enterprise side. But it does take time. Like the hyperscalers can build up very quickly. The enterprises, take a little longer. And I kind of get that nervousness. But at the same time, everything we're seeing right now, at least in terms of near and medium-term demand, still seems really, really strong. It doesn't look like we're seeing any signs of slowdowns yet.
In an unexpected twist, heralded across Wall Street, Nvidia, once the darling of the tech-savvy investor, is finding itself under intense scrutiny. Just a month ago, shares of Nvidia were comfortably trading at all-time highs, propelled by ceaseless optimism around artificial intelligence, AI, and future growth prospects. Today, however, Nvidia is grappling with a nearly 20% tumble in its stock value. Talk about a plot twist. One cannot help but wonder, is this the end of the rainbow for Nvidia, or is it just a bump on the golden road? Central to this narrative are Nvidia's forthcoming Blackwell chips, and the market's reaction to their delayed release. Add to that a highly anticipated earnings report, set to drop on August 28th. And you have a potent mix that has everyone from analysts to retail investors holding their breath. As this drama unfolds, key players like Bernstein analyst Stacy Rasgon have stepped into the fray, providing insights and forecasts on what could lie ahead for Nvidia. The broader question remains, can Nvidia maintain its stronghold in the lucrative semiconductor and GPU industry while keeping up with sky-high expectations from the AI revolution? But first, if you want to keep up with the latest updates of companies like Nvidia and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Welcome back to Swalk on the Street. Let's turn to the chips. The ongoing competition heating up as Nvidia and AMD both unveil new AI products just over the weekend. Joining us now to discuss, Wall Street's top chips analyst, Stacy Rasgon of Bernstein Research, has an outperform on Nvidia, price target 1,300. Market perform on AMD, price target 140. Stacy, good to see you.
Good to be here.
They're moving now at a clip at Nvidia. I mean, I'm curious to get your thoughts, given how you've watched their product cycles through the years. But each year now or more, we're going to get an introduction of a new chip, or at least the idea of a new chip before the existing chip we just heard about has even hit the market.
Well, so that's right. So we've known for a while that Nvidia is moving to an annual product cadence. This is faster than what they did before. They used to be on call it a 2 to 3 year cycle. They are moving to an annual cycle. Now, we've known that, and they've now given us a tease of some of the products that are coming year over year on that full year cycle. And again, it was just a tease at this point. To your point, we've just really learned details about the current next generation, which is called Blackwell. And that hasn't even really started shipping yet. That's kind of like a second half of this year. But we've got a bit of a tease on what's coming next. But yes, they are clearly moving to an annual cadence.
And is it enough to make you believe they will continue to maintain their unrivaled position?
Well, so it's funny. So you go look at AMD. So AMD is now apparently on an annual cadence as well, right? Yeah. I would argue just given the differences in scale, it's going to be harder for AMD to do that. I mean, but they probably have no choice given the acceleration and the roadmaps that NVIDIA has done. And again, you can look at some of the announcements AMD made. So they've got a new one coming out. I think it's the one end of this year. It's called the MI325, which is basically a version of their current part, which is called the MI300, but it's got more high bandwidth memory. Okay. That may put it a little closer to NVIDIA, what's called, there's too many code names here, but it'll put it closer to the H200, but I don't think it will yet be competitive with Blackwell, which is what NVIDIA will be launching around the same time. And we'll have to see how AMD can compare, but it's going to be a tough thing for AMD to keep up. But clearly they're going to have to try, and they're going to do their best. They're doing them.
From a third-person perspective, the current predicament facing NVIDIA couldn't have been timed more unfortunately. Amid the loud cheer leading up to the August earnings report, the 3-month delay of NVIDIA's game-changing Blackwell chips served as a rather unceremonious dampener. Some would say it's akin to announcing a pizza party and then serving you stale bread. Investors, naturally, are cautiously evaluating the impact of these developments. There's no skirting around the fact that NVIDIA has been a stalwart in the semiconductor industry. For instance, even with the delay, Wall Street analysts like Stacy Rasgon have conveyed a rather measured optimism. NVIDIA's competitive window is so large right now that we don't think a 3-month delay will cause significant share shifts, Rasgon asserts, suggesting that NVIDIA's dominance over its mega-cap rivals remains largely unchallenged. This outlook is rooted in data, with mega-cap companies continuing to clamor for NVIDIA's top-notch technology. Nevertheless, the earnings report slated for August 28th is being closely watched as both a compass and a barometer for NVIDIA's future trajectory. Analysts are forecasting a revenue surge of 111.26% to $28.54 billion, alongside a GAAP EPS of 60 cents compared to 25 cents a year ago. These numbers, if achieved, would represent phenomenal growth, but the real litmus test will lie in NVIDIA's forward guidance and its ability to meet the roaring expectations of the market. A miss could indeed be catastrophic, potentially sending NVDA stock into a tailspin. Estimations for the next year are nothing short of staggering, with revenue growth expected to hit 97.94% this year, reaching $120.59 billion. Hello, everyone, and welcome back to Investocracy.
The market cap is $3.15 trillion. And when we did our segment a little while ago on the race to $4 trillion, I think it was Gil Loria made the point, you can't have both Microsoft and Nvidia reach $4 trillion at the same time, because his line was basically, Microsoft can't afford for NVIDIA to be that necessary. And if NVIDIA is going to be that large, then Microsoft's margins will be destroyed and its profitability will be called into question.
I don't know about destroyed. You have to remember, a lot of the CapEx that's going on right now is not necessarily all incremental. Like, you can go look at sort of spending on traditional data centers, CPUs and traditional servers, networking. They're all in the toilet right now, right? I mean, so there's been a pivoting of spend from more traditional things to GPUs. Some of this GPU capacity as well is fungible, like these cloud vendors can use it for their existing needs as well. Not all of it is generative AI. Some of it is things like recommendation engines from players like Meta, like other like more traditional, more legacy types of machine learning where there's already a clear return on that.
All right.
And you can sort of run through the math. Like if the returns take a little longer, I mean, it doesn't impact their margins all that much. It's a colleague of mine who covers Microsoft, he did some of this work. It's a few hundred basis points, I think, on margins given the incremental depreciation load. It's not crazy the amount of money that they're spending at this point. It's not like they go down the toilet if this doesn't come to play. So no, I kind of disagree. I push back on that a little bit.
And we should continue that.
However, the momentum seems projected to cool down in subsequent years, with growth estimates pegged at 37.72% for 2025 and 13.67% for 2026. Clearly, the law of large numbers doesn't exempt NVIDIA, but these figures are enough to keep the bullish sentiment alive, at least for now. Meanwhile, NVIDIA's recent earnings streak has been a story of beating expectations and continuously raising guidance, which has naturally set a high bar for future quarters. According to Eddie Pan's article on Investor Place, NVIDIA's adjusted net income is expected to rise by 135.20% to $15.85 billion. However, this would ironically mark the slowest growth pace since Q1 of 2023, further laying bare the mixed signals surrounding NVIDIA's stock prospects. A particularly engaging subplot within this drama is the role of AI. Can applications within this domain substantiate the lofty revenue projections? Or is AI more of a hyped-up buzzword than a profit goldmine? Nvidia's inherent connection to the AI industry feeds into this debate heavily. AI-related revenues are one of the vital performance indicators that will be under the microscope as the company releases its earnings report and updates its guidance. A few tongue-in-cheek comments from the investment community highlight that perhaps Nvidia's stock is playing hard to get, dropping in value only to rise phoenix-like after the dust settles. Could there be some truth in this? Let's answer this. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Discussion, because maybe they both can be 4 trillion companies and maybe Apple too. A lot of people, whenever there's a boom in something or just a well-performing stock, love to say, well, if you missed the big one, go with the next in line. And I'm not sure that ever really works out, to be honest. But that's the line on AMD. And I notice that you're also market perform. You're talking about beware of some core business weakness. Why are they not the obvious one to bet on if you don't have the stomach for Nvidia?
Well, I mean, they are and they aren't, right? So I understand the need for a second source, and they are the clear second source, at least on GPUs. At the same time, you can also see where the dollars are going. So AMD has suggested that they'll sell $4 billion plus in AI revenues this year. I think most investors think they'll do 5 or 6. I don't want to take too much away from them. It was 0 a year ago, so even 0 to 4 over a year is good.
Mm-hmm.
Now, that being said, NVIDIA might do $100 billion in data center revenues this year. It's clear where the dollars are flowing, right? That they're not flowing to AMD like in the grand scheme of like everything that's getting spent right now. And in fact, most of the, at least maybe the more credible second source may not even be AMD. Maybe a player like Broadcom,
exactly,
or some of the other like ASIC players who are doing chip design for the hyperscalers who are doing their own chips. That actually may be the more credible and realistic second source over time rather than a second GPU vendor.
Your NVIDIA price target is 130, which isn't even the 52-week high. For Broadcom, you're at 1950. So how, what would you describe the opportunities there as still massive as well?
I think they're big for Broadcom. I actually really like Broadcom. So it has what I call the second best AI story in the space. And remember, in semiconductors, there's only really 2 companies that are seeing material upside from AI. It's NVIDIA and Broadcom. That's about it. Everybody else, AMD and quite a few others, as good as they're doing, their core businesses have been weak enough where the AI has not been helpful. With Broadcom, their core business is also quite weak. They play in some of those legacy networking areas, but the AI business has been strong enough to completely bridge over it, so they haven't had to take their numbers down. They've seen numbers going up. Their current AI guidance for the year is actually very, very conservative. They've also got software businesses and other things that I think can drive upside going forward, and the stock is very cheap. So I really do like Broadcom.
As the clock ticks closer to the August 28th earnings report, investors find themselves at a crossroads. On one hand, Nvidia's current stock price dip, thanks to macroeconomic woes and the chip delay, seems like a predicament. On the other, the backdrop of enormous growth figures and high market expectations presents it as a golden opportunity. Taking stock of Nvidia's position, it's imperative to realize the inherent strength Nvidia holds in the semiconductor market. Its products still command a premium and demand remains robust among technology behemoths. As anticipation builds for the quarterly report, the smarter bet might be to focus on long-term growth instead of the knee-jerk reactions that the stock price is currently subjected to. Analysts are banking heavily on Nvidia's potential to continue leading in AI and semiconductor tech, bolstered by forecasts that expect a significant revenue uptick. Even as growth might slow down in the following years, Nvidia's positioning within burgeoning technological sectors like AI lends it a strategic advantage that few rivals can match. The prudent action, considering the broader picture, might indeed be to hold on to NVDA stock, betting on its strong fundamentals and future growth capabilities. After all, in the fast-paced, sometimes erratic world of stock trading, the lions of the industry, like Nvidia, frequently prove that temporary setbacks are just preludes to colossal comebacks. So what do you think, dear viewer? Will Nvidia's tale be one of reinvigorated triumph post-August 28th? Or are the storm clouds gathering for a longer-term impact? Drop your thoughts and let's continue this dialogue about one of the most captivating stories unfolding right now in the stock market sphere. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.